Well, the immigration agenda that is being carried out right now actually couldn't be done without private companies. I believe the number is 66% of all migrants sleep in beds or on concrete that is managed by a private company. And basically everything that takes place in these facilities is also privately managed through subcontractors, whether you're talking about healthcare or commissary provisions, what have you. So, you know, it was a considered strategy of the large private prison operations like Geo Group and CoreCivic to, you know, branch out into immigration detention, which they saw as a growth opportunity. And I'm not really making that up. That's actually in the CEO earnings statements and their calls with investors. They see this as part of their survival, moving their model from prisons, which they've you know had a sort of a little bit of a shrinkage where they've shrunk their output into immigration, which you know, as long as we have this divisive kind of nature of that policy is probably something that's going to grow. So it plays a vital role, and you really, as I said, could not get this policy done in terms of ICE, in terms of CBP, without private companies' involvement. Well, there's actually a significant amount of work that can be done and should be done. Dodd-Frank, while imperfect, gave the regulators quite a lot of tools. If they want to downsize banks, they could do that through the FDIC or through the Financial Stability Oversight Council, which is sort of a super regulator composed of the heads of a lot of the other regulatory agencies. They could actually break up the banks through existing authority right now. If they wanted to move to a different model that promotes financial inclusion, because what we see in the country is about a quarter of all families either have little or no access to the financial system, which is a tremendous hardship. We could, under existing authority right now, use something like the U.S. Postal Service to provide a public banking option for families, for every family in the United States potentially, to at least have an account and a prepaid debit card or something like that. You know, there's a lot that can be done to rein in the banks. We don't know what the next financial crisis will look like, but what we do know is that the pendulum swing and the sort of dynamic that happens is very considered. It happens pretty much always this way. There's a crisis, we re-regulate the system, and then the pendulum starts swinging away from regulation, and then we have another crisis. And right now we are on the pendulum swing away from regulation. That's what the Trump administration has been doing practically since they got in. And because so much discretion is given to the regulators, they have the ability to implement that, whether or not they're anything past Congress. I will say that a very bad deregulatory bill did pass in 2018. It was probably the most important bipartisan bill that Trump signed in his first 2 years, and it was aided by 16 Democrats in the Senate and about 30 or so in the House. And that you know, really represented a troubling trend, because traditionally financial deregulation is a bipartisan affair. And so we need to have a situation where people are more understanding of what is going on within the financial system, and that they talk to their representatives and say, we're not going to let you get away with that, being, you know, having something you can point to as bipartisan being threatening another financial crisis. The most important thing is, I guess they call it what, caveat emptor, let the buyer beware. What we saw during the financial crisis of 2008, and even before that in the run-up, is that people were sold on deceptive mortgages, on mortgages with onerous terms, or mortgage resets that, you know, the interest rates shot up after a couple of years. And they were sold on because they didn't really know what they were getting into. They didn't really know any better. Financial literacy is certainly not enough. In fact, it's a tool used by the banks and the financial companies to get out of regulation. They say, well, if we just teach the buyers, the borrowers, then everything will be okay. Well, no, we need much stronger scrutiny and oversight of the mortgage industry. But I have to say, you know, I wrote a book about the foreclosure crisis in 2016, so that's you know, going on 3+ years ago, and to this day, I still get letters and emails from people who are still going through foreclosure, using phony documents, deceptive practices, and still begging me, you know, can I do something to help? You know, I've become sort of I don't know, an advisor to these people, and I still get them day after day after day after day, and it just shows you how little has changed. I mean, we basically made homeowners invisible in the public policy space. After the financial crisis, everything was focused on nursing the banks back to health and not necessarily nursing homeowners back to health. I had an interesting situation where I talked to a guy who made a movie about the foreclosure crisis, and I asked him how he prepared for it, and he said, well, the first thing I wanted to do is look for examples in movies where somebody was evicted from their home, somebody was foreclosed upon. And he said, the only fiction film I could find, I had to go all the way back to The Grapes of Wrath in 1939. We have no sort of cultural history around foreclosure. We don't talk about foreclosure. It's sort of shunted to the side of our policy debates, and that's why homeowners got a raw deal. That's why borrowers were not protected in the run-up to the crisis and not given relief in the aftermath. And so the most important thing I think that needs to be known is that we need to make them more present in our debates, whether you're talking about renters or homeowners or, you know, anybody with housing. When you're talking about housing, it's about the people living in those homes that need to be protected. Wow, that's a great question. You know, I always kind of pushed myself in multiple different directions at once. I was, you know, working while I was writing and blogging and things like that, and I was always sort of pulling myself in different directions until I found the thing that I was really passionate about. And you know, certainly that could have happened earlier. I could have just sort of gone full-throated into that thing. And I think the lesson there is that you find what it is that motivates you, you find what it is that you're passionate about, the story of yourself that you want to tell, and you just go for it. And that's, I think, the best advice that you can give anybody.